Hi, Jonathan York, Bay Financial Partners, looking at investment markets. In the end, the Fed did everything it possible to sort of try and calm the markets down. On the dot plot, it looks like there's no Fed rate hike now until 2023. Though they did anticipate that inflation might be slightly higher than their target of 2%, running at about 2.4 for 2021. They do expect the economy to recover and reducing the unemployment rate down to around 3.5 by 2022. Present, the big issue in the US is sort of the rising 10-year rate. That got as high as 175. That's backed off a little bit down to around sort of 164 at present. Now, the reason why the 10-year rate is increasing because the markets are expecting that once the economy does fully reopen, there will be a surge in inflation. Certainly, there's quite a bit of pent-up demand in the US economy, and that rise in inflation will then see interest rates increase. Fed has done its best to sort of calm that and say sort of implies that there's no official rate increase coming until at least 2023. And certainly it is quite interesting this week as we sort of reach the anniversary of the big sell-off in 2020 on the back of the COVID-19 pandemic. A year ago, the S&P was around 22.30, currently around sort of 39.30. That's obviously quite a major increase over the last 12 months. The big worry now for the US economy is states start to relax their sort of restrictions. It's sort of a rise in cases. Really on the back of people viewing that once they get the vaccine, and once the vaccine is now out and starting to be distributed to the population, the sort of worst is over and they can go about their normal lives. Now, certainly the US economy has had a pretty major boost from the 1.9 trillion stimulus package that got passed. There's also talk about a potential $2 trillion infrastructure spend as well. Now, if that is the case, that really would push US GDP to some pretty big levels. Indeed, one of the major Wall Street firms is predicting GDP for the US for 2021 could be as high as 7%. Certainly, China seems to have recovered pretty well. Their forecast for GDP for this year could be as high as 9%. Now, again, that would be pretty encouraging for the global economy. China is a big consumer out there now as well. So, it does all bode well for the global economy. Now, oil is certainly backed off. That's around sort of $58 and change. That's really on the back of the sort of potential further lockdowns in Europe as they sort of prepare themselves for the third wave of the virus. So Europe's facing some pretty major issues. Germany's announced a 5-day lockdown over Easter, and that's really just trying to contain this the COVID-19 virus. And again, the UK doing pretty well on its vaccines. They're now up to nearly 50% of the population vaccinated. And the UK is now facing an issue with the sort of people who don't want to get the vaccination, or the anti-vaxxers. And what do they do with those? In Australia, while they're having to deal with the COVID-19 issues, they've also got major flooding issues as well, predominantly in New South Wales, and now moving up the coast to Queensland. So far, they've had sort of 5 days of pretty much solid rain, and potentially another sort of 2 to 3 days of rain forecast as well. That's obviously posing some pretty major issues for the Australian economy. And it's just going to be interesting to see how they do sort of come out of this, because certainly the bill for cleaning it up is not going to be cheap. Current estimates are around sort of $2 to $2.5 billion. Now here in New Zealand, we reached the anniversary of the lockdown, when the country went into level 4 lockdown. It's really sort of quite interesting to see how the economy is sort of recovered from those lows. NZX 50 was around 9,100, currently around 12,400. That's a pretty major recovery, and all on the back of having no international tourists. Latest opinion polls saw a major fall in Jacinda Ardern's sort of popularity. She was down around 15 points, and sort of quite interesting now that the government has announced they're working hard to get a Trans-Tasman bubble up and running. No date's been assigned yet. The sort of hot date and sort of rumours around sort of April the 19th. Where we then be able to travel between Australia and New Zealand without having to quarantine. Now, obviously, that'll be a pretty major boost for the New Zealand economy. Also, a good boost for the Australian economy as well. But certainly a pretty major boost for the New Zealand economy, and will really give a lot of the tourism operators a little bit of hope. Also announced as well a big sort of shift in trying to solve the housing crisis. They've extended the Bright Line test from 5 years to 10 years. Done away with some of the tax loopholes as well, and looking at a big sort of infrastructure fund as well to try and improve the infrastructure for sort of major developments and subdivisions. Certainly the infrastructure fund is fine, but again, it all takes time. You can't just sort of do these things overnight. They are sort of 3 to 4 to 5 months at least, and before you actually start to see any progress made. And in the meantime, you've still got a housing crisis where you've got low interest rates, you've got limited supply, and you've got excess demand. Also, as well, there's a further COVID case from a managed isolation worker. What's really interesting about this case is that he's had his 2 vaccine jabs. And while this person and his family, close family, have provided sort of weak positive tests, it does throw up maybe a few sort of question marks and sort of how he actually contracted the disease. Still no date for the major rollout for the vaccines. Again, that's for the most of the population that is looking from sort of July onwards. So while it is pretty tough in this low interest rate environment, so if you are looking for income out there, there are a few alternatives, and if you're interested in discussing what's available, so go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.